Hi everyone, I hope you're all doing well, and today I'm going to talk about three stocks that I've been buying recently and I could continue to buy in the month of February. So today I'm going to do a little bit of an update on them stocks, not as much as a deep dive because I have covered them quite a few times on the channel. This is just a bit more of an update into them stocks and why I continue to buy them, because they are still bringing out very positive news out. And obviously, while the stock prices carry on going down or even flatline at very cheap valuations and the bull case on them companies are just getting stronger and stronger, I continue to buy shares in these stocks. So these are three that I'm going to talk about. I bought these stocks, this is not just the week that's just gone, but the week before that. It's just been such a chaotic week that I haven't been able to update you a little bit earlier because earnings have been absolutely nuts, so that's kind of took the priority. But yeah, I thought I'd just keep that transparency so you guys kind of know what I'm buying and selling, even if you're not on the Patreon. So hope you enjoyed the video. If you could hit the like button, that'd be absolutely amazing. Now, if you do want to know when I'm buying and selling these companies in real time, make sure to join the Patreon. Link is in the description. As well as that, there's 600 members to talk to on a Discord, and also I drop at least 2 exclusive videos a week on there. Last couple of weeks though, I have been dropping 3 exclusive videos a week on Patreon. The latest video was early today, just doing a bit of an update in Facebook and just talking about what my thoughts are after their trading update in Q4. But obviously as well, being more regular updates. So I have been buying a few more stocks last week as well that's just gone, and that's where you can get a bit more of a real-time update, I guess. So yeah, just a shout out there, and it is only £5, which when you consider 2 or 3 exclusive videos a week, as well as a Discord and some really good members that contribute very good information on, it's not too bad at all. But anyway, we're going to get stuck onto the 3 stocks that I have been buying the week prior to the one just gone. So number 1 was Hims & Hers. So the reason why I bought this one, I kind of covered it on the channel when this did happen. There was some more positive news out for Hims & Hers, and what has happened with Hims & Hers, if we just look here, share price, just anything that is associated with SPACs has just been absolutely killed, and it's not even gone to the point of view where, okay, we'll go back down to the SPAC valuation. Like a lot of the SPACs, and this one's included, has gone even lower than the SPAC price. And don't get me wrong, when it was back up at $22 or whatever it peaked out at, what was it, 52 I's of $25. I mean, look at that, $25, 52 Kai, and now it's down at like $4. Wow. But yeah, I mean, don't get me wrong, it did go to a crazy valuation, but then you start thinking, okay, now it's back down at SPAC prices, now it's below SPAC prices, and this is one that I started picking up at $8, and since then it's even gone, even lower, and it's now down at $4, and I just keep averaging in on this one. I think I'm about 30% down on this one right now, and as more this just keeps getting lower and lower, and the financials and the valuation is just absolutely crazy. The thing is, this company is now valued at the lowest valuation it has ever been valued at. This is the crazy thing now. We're not just talking about Hims & Hers, oh yeah, it's such a lower valuation from where it was 12 months ago. It is the lowest valuation it has ever been, and this is what this is starting to show now. And the thing is, this company here, this has been, in my opinion, one of the stocks that I've owned and has been the best financially, not on the share price, because obviously the share price is tanked, but when you ignore the share price and you actually look inside the business, this is probably in my top 3 best performing financial stocks in the last 12 months. They have financially absolutely smashed it. This company was only founded in 2017. The revenue in 2020 was $148 million. And when you look at the growth, what they're going to put in this year, this is what I mean. The company's just moving up and up and up. And it's just lowest valuation it's ever been. And while this happens, I just keep buying. And once again, I bought a little bit more of this. I wasn't really planning on to buy it, but it brought out once again more information that means that this company is just going to deliver again in the next few years. And I was like, okay, the bull case just keeps getting stronger, and if you keep giving me cheaper valuations, and the bull case just keeps getting stronger and stronger, I'll buy some more shares. And that's why I carried on buying a bit of Hims & Hers. But I have got a full video on this one. This is just a bit of a brief overlook on this one. Going into their recent what is predicted to happen with Hims & Hers, we will get a trading update soon from these guys, is at the moment they're not losing too much money. The thing is that these guys actually have really good gross margins. They're just not profitable because they spend so much on marketing and improving the company and increasing that revenue, which I'm totally fine about. That's the whole point of a growth stock, is that you reinvest into the growth and get that market share, and profitability will come down the line. But the big thing for them is capitalizing on this whole telehealth market at the moment, which they are doing. When you look at the growth numbers, they're currently expecting in the current quarter 85% revenue growth, and for the full year it's going to be 77% revenue growth, and the average estimate is 264 million. So if we look back onto what it was in 2020, 148 million. Yeah, this year they're going to put in 264 million. Not too bad at all, especially when I tell you they were expected to grow 30% this year and they're going to grow at 77%. That's pretty good going, isn't it? And this is what I also think is really important, is next year the analysts are currently expecting once again 30% revenue growth, and even that would be still pretty impressive. You know, that's 134, that's the low estimate. The average estimate is 350 million. I mean, this company is valued at 868 million on the market cap, which isn't too bad. But this is the crazy thing, is that I think that Hims and Hers have a history of basically coming out with really low numbers and making sure that, okay, what we do is through the year we keep updating our guidance. And with all the partnerships they've announced recently, I would not be surprised at all to see this throughout the year go up to 40%, 50%, maybe even 60%. And then when you start talking about that much growth, and then you look at what valuation that's going to be trading at, absolutely crazy. So I think what we have here is basically Hims and Hers going with a bit of a sandbagged guidance going into 2022, and once again we could see a massive over deliverance in here. I mean, not that that's benefited the share price at all in the last few months, that's just general how much negativity there is out there, to the, you know, the hate to the SPACs out there. But at some point when growth stocks come into favor and people look at Hims and Hers and go, okay, they're updating the guidance again, at some point hedge funds, Wall Street will click on and go, we should be buying that. You know, this is such a cheap valuation. And when a stock like Hims and Hers comes back into favor, you watch so quickly, this will as quick as what it's gone down, it will go $5, $6, $7, $8. That's what will happen when this comes back into favor, because what the results they have bringing out is absolutely fantastic. And we do get the actual new financial quarter on February the 22nd, so it's not too long to wait, I guess, until we do get that one. But going on to the main reason why I did buy some more shares in Hims and Hers is because they, like I said, the bull case got even stronger. The week I bought the shares, January the 20th, Hims and Hers Health to offer hair care products at Walmart stores. So obviously you're thinking, okay, Walmart, thousands of stores, big partnerships, that's going to help the sales going into 2022. I'm sure that wasn't originally in the guidance, and you know, at the moment it is in 1,400 Walmart stores, and you think about the potential that they ramp that up as well. This is just more and more income, and this is not just the only partnership they've announced. You know, there's been so many partnerships, but this was the newest one that I was like, you know, you keep giving me more and more positive news and the share price goes lower. I was like, I'm going to have to buy some shares here. So that's the reason why I did buy the shares, is that positive news just once again, you know, it went up in pre-market and then eventually it just dropped it all. And I think it actually, on the day, it actually went negative after this news. And I was like, right, this is how stupid the stock market is right now. I will buy some shares on this news. If you're giving me a lower share price on this news, I'll be buying it. And that's what I did. So yeah, Hims and Hers, I still think is set for a very good 2022, as long you don't know what investors in Wall Street and hedge funds are going to do, as long as they kind of wake up and that fear kind of goes away. But I think I'm buying a fantastic company here at very ridiculous valuations. Number 2, DraftKings. So once again, kind of comes in the same sort of category as Hims and Hers. Fantastic 2021, even better than what I thought it could be. And this came through a SPAC originally, went up to 52-week highs of $74. And without doubt, you know, I always said that DraftKings, I never thought DraftKings was a cheap stock. It was always a decent valuation, but what it has had recently is that pullback all the way down to $21. And for me now, DraftKings is at cheap valuations. You know, that is crazy, crazy cheap. And the progress, once again, this company has made over the last 12 months is absolutely fantastic. And what has happened over the last kind of few weeks has only kind of positive news after positive news after positive news, and I think after sooner or later people are going to wake up and kind of think, okay, we should be buying this. And I think it is starting to happen. You know, you do look at DraftKings, you know, this week it was up 5%, so it wasn't a negative week at last for DraftKings. Same for like Hims and Hers. I actually think they had a okay week. If we look, yeah, Hims and Hers was actually up 3% for the week, so it isn't dropping as much on these sort of stocks. At some point I feel like we are going to run out of sellers, you know, and eventually people look at these sort of stocks and how they're performing and the valuations and go, we're going to start buying them, and they will jump very quickly. Even that was starting to happen at the start of the week, to be fair, out of nowhere, 14% jump. And once again, like I said, DraftKings is just such a good year, and the great thing now is that we're actually coming into the peak season, the NFL season. We're going to have Q4 with some NFL numbers in there. We go to Q1, which obviously won't be for another kind of 3 months yet, but when we get around to Q1, obviously we're going to have the Super Bowl numbers, and they're going to have a lot of new states in there, which is going to be great. So yeah, it's an exciting time for DraftKings. Plenty of news stories once again coming out and saying, supporting the bull case in DraftKings. One here saying that DraftKings leads sports betting handle in Arizona again, basically saying that the total handle is being very good, saying the marketing's going to get cut, and this is what will happen eventually with DraftKings. The more the mature the states comes, they cut the marketing budgets, and these states come profitable, like New Jersey, and that's what I'm kind of looking forward to in kind of Q4, Q1. It's just getting a bit more of an update of how the profitability side is going. Obviously, we know New Jersey is profitable. It shouldn't be too long until we have a few more of the 2019 states that will launch to become a bit more profitable. And that's the big thing that bears use. They say, oh, look, it's a trash company, it loses so much money. The only reason why is because it gets customers, and then it cuts back its marketing, and then it becomes profitable. This has a clear path to profitability. I'm kind of looking forward to hearing more of an update, so it kind of silences the bears a bit more. Clearly, they kind of have the fingers in their ears when they kind of hear that New Jersey is profitable, but hopefully the more we kind of say, okay, now New Jersey is profitable, West Virginia is now profitable, they kind of realise, okay, this actually does have a path to profitability in the next few years, so we'll see what happens there. But it was just basically this article came on and said how good Arizona is, DraftKings leading the market share here. Another one talking about Morgan Stanley basically calling this is the bottom for the stock after the massive sell-off. They also went to talk about looking ahead at the industry landscape. California could be legalised online sports betting this year, which would add $2 billion to Morgan Stanley's total addressable market. Launches in Louisiana, Ohio, Maryland, Nebraska are all expected to drive upside as well. So, there's still plenty of states for DraftKings launching going forward, and we'll see how many of them come active as well as the year goes on. This one actually did talk about New York that came online. The only problem with New York is the tax rate on it, but the thing is that this is just an example of like every time a new state comes online, like the expectations for the spend just get absolutely blown out of the water. Like just more and more is being spent than what people have thought, which just shows how popular this is going to be and how crazy every state launch is going to be going forward. And there was also some news about Louisiana. Louisiana did launch their sportsbook, and DraftKings have started doing their sportsbook in Louisiana. This is great because the timing is cute. Obviously, this won't be in the new update when we do get it, but this will obviously help Q1 numbers as well as New York. So yeah, it'd be interesting to see what DraftKings kind of give out for the guidance for 2022. And when we do look into the future guidance of DraftKings, obviously the losses, I wouldn't like to predict the losses on this one because it all depends on how many state launches there is, because more state launches is more marketing spend. The less state launches, the less marketing spend, which this is going to be all over the place. The big thing is like the revenue growth and how much they keep growing the company for a company like this. And obviously coming off this year now just gone, 106% growth is absolutely fantastic. So yeah, that's a crazy amount. They delivered so well this year just gone, and I guess it kind of moves on to 2022, and if they grow at 50% revenue growth, obviously that will still be pretty good. I have noticed these numbers have started to creep up in the last few days. Obviously that's still not given any benefit to the share price. The analysts are now starting to up their forecasts, and it hasn't really benefited too much, but they are giving DraftKings higher growth numbers at the moment. And I generally think, as I said previously, for me, I could see DraftKings easily doing $2 billion. Now, analysts are starting to move up to that $2 billion mark. You'll see here that it is 1.9 billion. I believe only a couple of months ago that number was 1.7 billion. So that's where analysts are starting to get a bit bullish on the numbers, and once again it has had no effect on the share price. But for me, I would expect DraftKings to come in with over 2 billion in revenue. For me personally, I would be more expecting probably 2.1 to 2.2 billion in revenue. The reason why is because I think that when they have acquired GNOG as well, that will obviously put them up to somewhere around 1.5 billion. And then when you start adding the states, still growing a huge amount, and then you add in New York, and then you add in like Louisiana and any other states that come in throughout the year. I think the maturing states, the new states, and the GNOG will easily see you over 2 billion. So yeah, I think that will be somewhere between 2.1 maybe to 2.3 billion. So I would see this getting hiked up a little bit as the year goes on, as they did previously as well, which once again had no benefit to the share price, even though they smashed the numbers. But hey, you know, that's a big thing why you don't look at the share price and you look how the company's performing. So yeah, DraftKings, my biggest position, and all that I've seen in the last 3 months is me kind of getting more and more confidence on this company, and yeah, I'm ultra bullish on it. I generally can't wait for what this company has in the next 5 years. And the next one is Celsius. So I did buy a few more shares in Celsius. Once again, just kind of supporting that, you know, how are we starting to run out of sellers? Celsius was once again one of those stocks that actually had a positive week, up 8%. And once again, you know, this one out of DraftKings and I'd say Hims and Hers is probably the more expensive on the valuation side of it, but still it's a fantastic company. You know, this company, the difference between Hims and Hers and DraftKings and Celsius is that Celsius is actually profitable, and they do kind of have a high P ratio because they aren't focusing on profit just yet, and they're focusing on more reinvesting in the company, which I'm absolutely fine about. That shows in the revenue growth numbers. So yeah, I think this company is fantastic. The brand's really good. Someone actually sent me this on the Discord. I think it was K Sands, I think you sent it only a few hours ago, and it's like the displays they have for Celsius, like the branding and everything like this. This is great. You know, I'd say this is just like US based. I mean, when this starts hitting like the UK, it's going to be absolutely amazing. You know, this is still such early stages that the more this kind of like ramps up and, you know, takes, you know, more market share and really does compete with the likes of Red Bull and Monster, and the more it gets into the UK, yeah, I can't wait for it. So yeah, absolutely fantastic there. With regards to Celsius, there's not really too much news I can give you on this one. You know, like with like Hims and Hers, they're being quite public and making a lot of moves. Celsius are kind of just quietly ticking away in the background, and we'll probably get an update a little bit in the future about this when it comes to the trading update. Going into earnings, I mean, average estimates still looking to ramp up profitability. Obviously, I'm not too bothered about profitability just yet. Well, I don't want them to, you know, totally go from being profitable to lose a ton of money. But, you know, as long as that's ticking up nicely or staying about where it is, that's fine. The big thing is, you know, taking that market share, coming on the lines of where you talk about, you know, Celsius, Red Bull, Monster, for example, and it's coming off a year with, you know, 131% revenue growth, even going into next year, 62% revenue growth going forward. So yeah, that would be still very impressive growth, and, you know, for a company that is pretty decent on the balance sheet, still putting in fantastic revenue growth, also profitable, growing profit at a good rate. Yeah, I'm looking forward to seeing how this one does in the next few years, and as it expands more out of the US, I guess, really. So yeah, those are the 3 stocks anyway, guys. Hope you enjoyed it. If you could hit the like button. If you're new and this is your first time watching, maybe subscribe, and I'll see you all in a bit.